Hi, I'm Sandy Ingram, aka C. Ingram, a registered tax professional with the IRS since 1999. If you've been following my channel, The Education Matrix, because education changes everything, then you know we have talked about the Iraqi Dinar investment and what could happen as far as it relates to taxes. We've learned that we need to probably entertain the idea of employing a financial advisor. We've also learned that we want to take our gains and we want to invest them into income producing opportunities so that we can maintain the core of our wealth. We don't spend our wealth, we're going to invest it, and then we live off of the investments, whether it be passive income, income from a business, or whether it's living off the interest and the dividends, so that we maintain our wealth. Now, in this particular video, we're going to talk about how we could be taxed by the IRS. Not the rates, because we don't know exactly when the Iraqi dinar is going to revalue, float, or do whatever it is that it's going to do. So are you ready to learn how you will be taxed more than likely? Let's get started. Okay, if I were to do your taxes today, this is what would happen unless there is further instructions from the IRS on the treatment of Iraqi dinar exchanges. The first thing we would need to understand is that gain or loss is only recognized when the transaction is closed. Meaning if you have Iraqi dinars in your possession, the IRS is not concerned about that. They are only concerned when there is an exchange, a loss or a gain. Foreign currency is treated as property rather than money. And 3, the disposition of goods is recorded at the sale price, but the gain or loss on the foreign currency transaction is recognized on the payment date. When a taxable item involves foreign currency exchange, then the following questions must be answered. Is the income ordinary or capital? Ordinary gains are taxed at your standard income tax rate, which is the same rate that applies to your salary or your wages. Capital gains are taxed at higher rates. There's one rate for the short term, which is 1 year or less, and one rate for the long term, which is 1 year or more. Most of you have had your dinar investment for well over a year, so the Iraqi dinar is taxed. Your Iraqi dinar transaction would more than likely be taxed as a capital gains rate long term. This is a Schedule D, and more than likely, this is where you will report your income or your transaction of your Iraqi dinar exchange. Now, as you can see, it's set up, Part 1 is for short term, and it's really held for 1 year or less. Long term is in Part 2, and it's held for more than 1 year. And basically, you will be taxed upon the gain. Now, you should remember that the basis is the cost that you spent to purchase the dinars, the cost that you spent to secure the dinars in a safe deposit box, and any travel costs that you have because of the Iraqi dinar, mail, packaging, insurance, whatever the cost is that surrounds your Iraqi dinar investment, that is all a part of your basis. And your gain will be determined, the difference between your basis and the amount of the transaction or your gain. Okay, here is a chart of 2019 for 2019 long-term capital gains tax rates. Now, as you can see, if you want to exchange 1,000,000 dinars, and even if it's at a 50 cents, say it floats to 50 cents, then you are talking about $500,000. So you are instantly in the 20% tax bracket as far as capital gains, depending on your additional tax circumstances. So taxes for you can get really, really serious and steep. So that's why you want to begin to think about what kind of tax loopholes do you want to implement to lower your tax liability and to do your tax planning. Do you want to go to a Schedule C? Do you want to go to a trust? Do you want to go to Schedule E? How do you want passive income from online income? There are so many different options. That's why you are encouraged to employ a professional financial advisor. But this is extremely important. You want to invest your capital gains or invest your profits into income producing, preferably monthly income producing investments. That way you keep your core of your wealth. I'll see you in the next video.